AMD stock is sitting at around $214, and Intel is at $37. Both of the companies, they're up more than 50% this year. So which one has more room to run? Because on paper, AMD, they're crushing it, right? And I'm not even convinced that the market has priced in what's coming next. Think about this. AMD, they just posted a 36% jump in revenue and 61% jump in net income. That is incredible numbers. Intel, though, they're growing slower, but they're pulling in more absolute cash while they're rebuilding their entire manufacturing ecosystem. But here's where most of us miss. One of these companies has a hidden tailwind. It's baked into the roadmap and could flip the long-term outcome. I mean, if you miss it, you're going to miss the entire trade. That's why by the end of this video, you're going to see exactly what that signal is, how it affects both stocks, and whether either of them deserves any of your money, at least right now. Now, if you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Okay, first, let's see what these companies actually do. Advanced Micro Devices, or better known as AMD, is one of the strongest players in the semiconductor world right now. They're building high-performance CPUs, GPUs, and AI accelerators that power data centers, gaming setups, PCs, and even embedded systems. Their business runs on 4 major segments. The data center segment drives cloud and high-performance computing with their EPYC processors and Instinct AI accelerators. This is the part of AMD that sells those heavy-duty chips to big tech and the cloud providers that need that serious computing power. The client segment covers the desktops and laptops through Ryzen CPUs, and that includes the new AI-focused chips that are built for faster productivity. In gaming, AMD has the Radeon GPUs and custom silicon that's used in those top gaming PCs, major consoles, and cloud platforms. And the embedded division supports automotive, medical, and industrial applications with efficient, reliable processors that are built for mission-critical workloads. So from gamers to cloud giants to car makers, AMD is everywhere. And that is the broad reach that matters when you're betting on a stock. On the other hand, Intel, they build the chips that power the modern world. I mean, their processors sit inside laptops, cloud servers, data centers, edge devices, and all of that infrastructure that just keeps everything online. And their business revolves around also 4 major segments. The client computing group drives the PC experience forward with faster, more efficient chips that are built for AI and just everyday performance. The data center and AI division supports cloud providers and enterprise workloads that demand massive computing power. Then we have network and edge, which brings AI to global networks, which transform industries with smarter software-defined systems. And then we've got Intel Foundry. This is what ties everything together. Manufacturing advanced chips for both Intel and external customers while also strengthening the global semiconductor supply chain. I mean, Intel is trying to be both the designer and the factory, not just for itself, but for other chip companies as well. And both companies are fighting for leadership in the next era of computing. Now, for us investors, that fight is exactly where the opportunity and the risks show up. But before we go any deeper, let's have a look at how the stocks have been moving. AMD currently trades around $214, while Intel trades close to $37. Over the last 1 year, we see that AMD is up 56%, while Intel is up 53%. However, this is where things get a little interesting. If we zoom out to 5 years, AMD is up 128%, and Intel's in the red at 29%. So short term, they both look similar, but long term, these charts tell you a story or two different stories for your portfolio. But as the saying goes, past performance is not indicative of future results. So let's have a look at what's under the hood of these companies. In their third quarter financials, AMD reported that revenue was up 36% to $9.25 billion. So the top line is growing fast, which usually signals strong demand and share gains. And net income was also up 61% to $1.24 billion, and that translated to 75 cents a share. So AMD is not just selling more, it's keeping more profit from every dollar of sales, which is what long-term investors like us want to see. AMD's data center business pulled in $4.3 billion in revenue, and that was up 22% from last year. And not only that, the client and gaming division, well, this is the real standout here, bringing in $4 billion, up 73% year over year. Client revenue hit a record $2.8 billion, while gaming revenue surged 181% to $1.3 billion as the demand for Radeon GPUs and semi-custom chips just took right off, right? On the other hand, the embedded segment brought in $857 million, and it was down 8% from last year. And that just shows some softness in that area compared to the other, the company's other fast-growing divisions. So overall, AMD is firing on most cylinders, but the real question is whether this growth is sustainable or is already priced into the stock. Now, in their third quarter financials, Intel reported revenue was up 3% to $13.7 billion. That means Intel is growing much slower than AMD, but it's still a revenue giant in absolute dollars. Meanwhile, net income was up 124% to $4.1 billion, or 90 cents a share. That kind of profit growth on modest revenue growth tells you that Intel has been cutting costs, improving margins, or both. In the quarter, $8.5 billion is from the client computing group, that's up 5% year over year, and the data center and AI segment brought in $4.1 billion for the year, which was down 1% year over year. And then the Intel Foundry unit brought in another $4.2 billion, which was also down 2%. But remember, Intel is in the middle of a strategic rebuild. And the question is just whether this transition period eventually pays off for shareholders or just drags on future returns. Now, of course, you're here because you want to know what will drive the growth of these companies moving forward, right? And you probably want to know which one's a better buy right now as we get into 2006. And it's something that's come up in my Discord channel recently because a lot of you are trading both Intel and AMD. Well, for AMD, the biggest catalyst I see right now is their push into AI and quantum computing. AMD is pushing the boundaries of computing by combining today's most powerful technologies with the emerging field of quantum computing. And this idea is simple but powerful. It merges both high-performance computers, AI, and quantum processors all into one system. And if they can actually get it to work, this will unlock breakthroughs in medicine, climate modeling, and areas that current technology just can't tackle. I mean, AMD, they're not just selling chips. They want to help power the next generation of scientific and AI breakthroughs. And to advance this quantum vision, AMD partnered with the Oak Ridge National Laboratory, the Posse Supercomputing Research Center, and Quantum Brilliance to build open software, scalable hardware, and hybrid system designs. Their technology already powers major systems like the Frontier supercomputer, which manages massive data workloads and quantum operations. Also, AMD has entered into a strategic partnership with IBM that's set to combine IBM's quantum computing leadership with AMD's high-performance processors and AI accelerators. And all this is to build scalable, hybrid quantum classical systems. Both will also explore open source tools like those from IBM to accelerate new quantum-centric algorithms and hopefully drive real-world innovation. Also, AMD is currently building its competitive edge by adopting an open AI strategy. AMD is teaming with industry giants to co-create scalable, standards-based AI infrastructure. And the expansion of global AI collaboration with Cohere just reinforces this whole open AI strategy. The partnership allows Cohere customers to run their models directly on AMD Instinct GPU infrastructure, while AMD will now integrate Cohere's North platform into its own internal AI workloads. At the same time, AMD and OpenAI announced a multi-year strategic partnership that's set to redefine AI infrastructure. Under this deal, OpenAI is going to deploy up to 6 gigawatts of AMD GPUs, marking one of the largest compute commitments in AI history. And this partnership builds on years of collaboration and now extends into AMD's future systems, with the first gigawatt deployment set for late 2026. Then on October 14th, Oracle and AMD also took their long-standing partnership to the next level by announcing a massive expansion that's aimed at helping customers supercharge their AI capabilities. Oracle Cloud Infrastructure will become the launch partner for the first publicly available AI supercluster powered by AMD's new Instinct MI450 GPUs. The rollout begins with the deployment of 50,000 GPUs in the third quarter of 2026, scaling up even further in 2027 and beyond. So, they aren't just building another data center, they're kind of laying the groundwork for the next generation of AI infrastructure. For investors, these AI and quantum partnerships are not just buzzwords. They're the potential multi-year revenue streams if AMD executes and their customers actually scale on their platforms. But look, there's no escaping the fact that AMD faces some significant risks, especially in the AI computing space. I mean, AMD, they've got some intense competition with Intel's dominance in microprocessors and Nvidia's dominance in GPUs. It's difficult for AMD to compete on a level playing field. With the recent collaboration between Nvidia and Intel, the competition just becomes even tougher for AMD. And I say it could even pressure pricing and limit profitability, especially as hyperscalers often negotiate aggressively for large volume contracts. And while their AI push is a growth catalyst, it can also present risks. Delivering on ambitious promises is going to require flawless execution. Any delays in ramping up its AI ecosystem or failure to attract developer adoption could slow AMD's momentum. So while AMD does have a high growth story, it also has a very high execution bar, and any stumble could hit the stock hard, especially at these rich valuations. Now, Intel, they're positioning themselves for long-term expansion through major partnerships, innovation, and government support. In August, they reached an agreement with the U.S. government, securing $8.9 billion in funding to expand domestic semiconductor manufacturing. This reinforces America's chip supply chain and positions Intel as a key player in national technology leadership and innovation. That same month, SoftBank invested $2 billion in Intel. This investment boosts Intel's financial flexibility as it now has the capability to expand fabrication capacity and develop next-generation technologies. In September 2025, Nvidia and Intel announced a groundbreaking partnership to co-develop data center and PC chips. By combining Intel's x86 CPU expertise with Nvidia's AI and graphics technology, the two now wanted to create faster, more efficient processors. And as part of the deal, Nvidia is investing $5 billion in Intel stock. And this just goes to show you the strong confidence in Intel's foundry capabilities. And last, in October, Intel unveiled Panther Lake, its first AI PC platform that's built on Intel's 18A process. The new Intel Core Ultra Series 3 chips promise major gains in speed, efficiency, and AI performance, and they're all manufactured at the company's Fab 52 facility in Arizona. Intel also previewed Clearwater Forest, its next-generation Xeon 6 Plus server processor that's set to launch early in 2026. Altogether, these architectures reinforce Intel's leadership in AI-enabled computing and US-based innovation. I mean, Intel's betting that by owning cutting-edge factories here in the States and partnering with giants like Nvidia, well, it can claw back that market share and become the go-to manufacturer for the AI era. For investors, this is more of a turnaround and capacity build story where the payoff could be big, but it often takes longer than the market expects. Of course, Intel investors should also be mindful of the challenges that's tied to the US government stake. I mean, Intel warned that the government's 9.9% equity stake may threaten international sales and restrict access to future grants. And I think this concern is valid because the company gets about 76% of its revenue from markets outside the United States. And of course, they may also face additional regulations or scrutiny overseas due to its government ownership. Intel also noted that issuing shares at a discount to the US government would dilute existing shareholders and reduce their voting influence, further complicating its global business strategy. Having the government as a big shareholder can help with funding initially, but it can also scare off foreign customers, and it chips away at your ownership as an investor. So the subsidies and support look great on the surface, but they do come with strings that are attached that could weigh on Intel's global growth. Now, let's see, which one or which stock is a better buy, right? Intel or AMD? Well, consider that a consensus among 43 analysts rate AMD a strong buy with an average score of 4.37. The high target price is $380, which suggests as much as 77% upside from its most recent closing price. So Wall Street is clearly bullish on AMD and expects even more upside even after this big run. On the other hand, 42 analysts collectively rate Intel a hold with an average score of 2.86. There's a high target price of $52, and that suggests as much as 44% upside from the stock's recent closing price. So analysts do see upside in Intel, but with more caution, which fits the idea of a slower, more uncertain rebuild story. Both AMD and Intel are shaping the next era of computing, but both in different ways. Right now, when you line up the fundamentals with Wall Street sentiment, I think AMD clearly takes the lead. Analysts rate it a strong buy with far higher upside potential. And its momentum in AI, data centers, quantum computing, and major partnerships, well, from what I know, it gives it a stronger near-term growth story. Intel still has a long-term case built on manufacturing scale, government support, and strategic alliances, but the market is treating it as a slower rebuild. And in today's landscape, AMD just simply looks like a better bet. As an investor, that doesn't mean you ignore Intel, but it does mean that you need a longer time horizon and more patience if we're going to hold it. But what do you think? Which company would you prefer as we get into 2026? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, that's it for me today. I want to thank you so much for watching, and I'll see you next time.